Would you rather owe a bank 5,000 or owe your brother 5,000? Most people think borrowing from family is safer. No credit check, often no interest. But when repayments are missed, the damage can be far worse than a bad credit score. When money is tight, family and friends can seem like the easiest option. No application forms, no credit checks, often little or no interest. For people facing debt stress, rising living costs, or an unexpected expense, borrowing from someone you trust can feel like the only solution. This video is about what the solution looks like and what it can actually cost you, your finances, and the relationship. And if you're new here, welcome. I'm Nova. I've spent over 15 years inside the banking industry as a credit risk professional. On this channel, I talk about winning with debt from a risk perspective. And my intention is just to replace fear with facts on consumer debt issues. And if these are topics that interest you, consider subscribing and like each and every video that interests you, that makes a difference to you. And everything I share here is purely for general financial education and is not meant for personal financial advice. There's one example I want to come back to later. Someone who borrowed from a sibling to solve one debt problem and ended up with two. We'll get there. In this video, I'll explain the risks of borrowing from family and friends, the most common mistakes people make, and how to protect both your finances and the relationship. Let's talk about the legal reality of an informal loan. And I want us to bust a myth here straight away that because there's no signed contract, a loan between friends or family isn't really enforceable. That's not entirely true. A verbal agreement to lend money can still have legal standing. Your friend or family member can take you to court to recover the debt, even without anything written down. As long as there's evidence the money was given as a loan and both sides intended it to be repaid. The hard part usually isn't whether it counts. It's proving exactly what was agreed. So the version of this that feels informal and low stakes, legally it often isn't once there's evidence behind it. So let's talk about David, who has a mortgage and falls behind after his work hours get cut. Worried about missing bank repayments, he asks his parents for 15,000 to catch up. They agree because they want really to help David. At first, everyone feels relieved. But 6 months later, David is still struggling. His parents start asking when they'll get their money back. David feels pressured. His parents feel ignored. Nobody intended to create conflict, either David or the parents. But the financial problem has now become a relationship problem. The biggest risk isn't the money, it's the relationship. When you borrow from a bank, the relationship is straightforward. You miss a repayment, the bank doesn't stop being your bank, but they structurally follow up on the missed repayments. Banks don't attend Christmas dinner with you. But when you borrow from family, emotions become part of the arrangement. Expectations shift. People feel disappointed. Trust takes a hit. What started as a financial solution can create tension that outlasts the debt itself. And this is usually the point where people realize the money was never really the hard part. Managing the relationship around it is. And now let's look at some of the common mistakes people make when they're doing such kind of informal borrowing. The first mistake is that there is no clear agreement. Was it a loan or was it a gift? When will it be repaid? What happens if a payment is missed? Most people assume the other person understands the arrangement the same way they do. Assumptions are where misunderstandings usually start. Imagine a friend lends you 5,000. You think repayment can wait until you are back on your feet. They expect monthly repayment straight away, say the following month. Neither of you said it out loud. That's exactly where conflict begins. The second mistake is borrowing without solving the real problem. And now here's the example I mentioned earlier. Someone has 20,000 in credit card debt. They borrow 10,000 from a sibling to bring the balance down. For a few months, things look better. But because spending habits haven't changed, the credit card balance starts climbing again. It grows again. And now you find that this person owes money to the bank and to their sibling. The original problem didn't shrink. It just got bigger and split in two directions, bank and family. And the third mistake is avoiding difficult conversations. When people struggle to repay, the instinct is often to go quiet. That almost always makes things worse. Early, honest communication beats silence every time. When borrowing from family might make sense. And this video isn't about telling you never to borrow. There are situations where it genuinely helps. A short-term emergency expense, unexpected medical costs, a temporary loss of income, or even a one-off situation where you know your finances will recover soon. In those cases, someone might go to the family for a loan. It can cost a lot less than relying on a high-interest credit product. But it still needs to be treated seriously, not casually, just because it's family. And let's be practical. How can we protect relationships? If you do borrow from family or friends, here's how to do it responsibly. First of all, agree on the amount. Secondly, discuss repayment expectations clearly. And third, put the arrangement in writing, even informally. And fourth, be honest about your financial situation upfront. Fifth, you can communicate early if things change. Most of the relationship damage in these situations doesn't come from the money. It comes from communication breaking down. Before you borrow from family, it's also worth checking your other options. If you're struggling with the existing loan repayments, you can contact your lender about hardship assistance. If you're juggling multiple debts, a financial counselor can talk through options that don't involve borrowing from someone you love. The earlier you reach out, the more options you will typically have. And as I close, now I just want to say that borrowing from family and friends isn't automatically good or bad. For some people, it's a real support through a hard stretch. For others, it creates tension that lasts long after the money has been repaid. But before you accept a loan from someone close to you, make sure you're not just solving today's problem while quietly creating tomorrow's conflict. A clear conversation upfront costs you a moment of awkwardness. Skipping it can cost you a lot more. If this helped you think differently about a conversation you've been avoiding, you know what you can do now. Remember to like and subscribe if not yet done so. See you in the next video, which is also packed with interesting ideas. Thank you.